Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day today trading. Also, I hope you guys had a good weekend. Just to follow up from what we talked about over the weekend, the market update video, let's look at the S&P 500 here, looking at the 65-minute chart. First of all, I think market is up. Market is up about 1.2%. Where is my... So market is up about 1.21%. I think, here, let's go here real quick. So Spider's up about 1.2. Nasdaq is down, up about 1%, close to 1% there. Dow and the Russell 2000 and the banks, they're close to 2% there. Semiconductor leg today, though. We didn't see any kind of a accumulation there in that sector, but looks like broad market is up today overall. And we did see a last hour ramp here, as you can see. So this is the first hour today. We actually did see a slight gap up. That gap is actually still open. You see that there's a slight gap up there. This is where it closed on Friday. That's where it opened. This is where it opened, and then we pull back a little bit. Either we got all the way up here and then came down, but either way, that first hour we did see that fluctuation, but never came all the way back down to fill that gap. So you know that when the gap does not get filled all the way, even the small gap like this, that's gonna be micro term bullish. And then that's the next hour. That's the second hour there. We kind of had a little bit of fluctuation, but it did close above previous hour's candle there. We kind of engulfed it, right? And then third hour, we finally saw a little bit of follow through. Fourth hour, we finally saw the price is getting above the first hour and the second hour and third hour. So we saw some continuation, a little bit of strength there on the fourth hour. And then a fifth hour, a little bit of pause. Last hour, we did see a strong move there. So let's talk about this here real quick. Let's kind of zoom out because this market has been moving up so fast that it's hard to see the overall picture, looking at things a short term now. You can see that my short-term moving average is now residing at 317. We have not yet retested that short-term moving average. And so we are now getting into kind of a macho bullishness. And I talked a lot about this in the over the weekend video. You guys remember that the market update video that I published on Friday? We talked a lot about how all these moves are psychological, right? And we also talked about the fact that on Friday, a lot of bears who are kind of, whining about the jobs report that being phony or miscalculated. Well, if that actually mattered, if that jobs report actually mattered, because that was a widely known news. Like they came out saying that jobs report, it was a miscalculated, right? So over the weekend, people had enough time to read through that and understand, oh my God, the jobs report, it's miscalculated. And if that was true and that was going to somehow impact the market, wouldn't you think, if that mattered, wouldn't you think that we're going to see some big gap down, back down to where it was before Friday's gap up? Because if you're contributing this move because of jobs report, that positive jobs report, when the news came out on Friday night and people had time to read it, kind of talk through, think about it, right? Friday, Saturday, Sunday, wouldn't you think that people come back Monday morning or maybe on the futures on Sunday night they'll be selling everything and just kind of wiping out what happened on Friday. Usually that kind of stuff happens if it actually matters. I've seen this stuff happening all the time in stocks and things like that. In the past, things like that happen. Like something happens, people thought that was legit, and then we see like a big bump, and then the news comes out that it wasn't what it was, it wasn't what it said it was miscalculated, or it was something misplaced or whatever, right? Then next day, that thing gaps right down and come back to where it was before. I mean, we see stuff like that happening with rumors, right? Like, let's say you're trading a certain stock, XYZ, and then XYZ, there's a rumor that Google is going to buy XYZ. It didn't really happen, but Google is going to buy XYZ stock at a certain price. And you see that stock gaps up on that rumor news, right? And then it hovers around like that. It hovers around. I remember this because I don't know, it was last year or something like that. I was trading something like a couple years ago. I was trading this stock, and then like it gapped up, and I got so excited, and then that thing just straight came back down on me. So I remember, and then like they realized that rumor was kind of a fake or something like that. It wasn't a real news. Like, it's not legit as what they're talking about. Somebody spread the rumor. I don't know. It turned out to be, it wasn't legit. It wasn't real. There was no real talk about it. You know what I mean? And then over the weekend, or like on Monday morning happened, that thing gapped right back down to where it was trading before that news hit, right? So the rumor that XYZ is going to get bought out by bigger company gaps up. Next day, or not next day, maybe a couple days later, a week later, over the weekend, the news comes out. It wasn't a legit article. It wasn't a legit news. And it gaps right back down to where it was. So if the jobs report mattered, and if you're contributing this move, Friday's move on jobs report, we should have seen a massive gap down, back down to at least 311, because this was just fake. We didn't see that. We actually slightly gapped up, and then we continued higher. This is kind of what I mean. It doesn't matter. Jobs report never really mattered. How many times people are looking for jobs report this entire rally? There are times our jobs report was horrible, and market moved higher anyway, right? We've seen just worst, horrendous economical data pouring out every single day since March. And this market continues to move higher, right? And how do you justify that? You know, how do you trade off of that, you might say, right? Because how can I invest in the market when there's no economy, right? And psychologically speaking, man, that's exactly what everyone is thinking and was thinking in March. In March, market always fools the majority, right? And now, market is getting near to 320. Can you imagine 320? 323 now. Can you imagine being at talking about 323 on Spider when we're trading in this vicinity here? Nobody, right? And that's why market is up here. This is why you have to be very, very careful who you listen to. Very, very careful who you listen to, right? Because if you're thinking like that, there will be somebody thinking the same way. And somebody's going to come out and say the things that you've been thinking about. But everybody else is thinking about the same thing. So that person is going to have a tremendously high followings or high views on YouTube or whatever, because most people are thinking the same thing. And then they all flock into the same single idea that there's no economy. This unemployment rate is worse than 1929. We're either in 2000 dot-com bubble, or we're right there in 1929 before that 80, 60, 70% correct or crash. Or it's going to be worse than 2008. So because because people are start thinking that way, and most people flock in to that same idea, majority of people are going to think the same way. Because, you have to understand the market, many times market isn't logical. Market isn't rational. You know what I mean? Like I proved that to you, showing you that Chipotle chart, right? Chipotle is up new all-time high when their entire restaurant, all of their restaurants are closed. It's not operational. But Chipotle like crashed back in 2016, 17 or something like that. Crashed like 70, 80% when their restaurants are fully operational. How do you explain that? How do you explain that? This is why, I think trading the market is more than fundamentals. It's even more than technicals. Because there are plenty of people out there, looking at the technicals and saying that there's no way we're going to see a V-shaped reversal. There's no way this thing is going to go back to all-time high. There's no way this is a dead cat bounce. There's going to be a lower high. We're going to get into consolidation. We're going to stay here for several years. You know what I mean? All kinds of stuff. Because, how many people there are people looking at charts also, like I am. But they're bearish. So it's not all about fundamentals. It's not all about technicals either. It's more than that. All right? Do you really think you can able to survive this market just because you have few things you're looking at? It takes a whole lot more than just couple things that you follow, and then you somehow going to try to predict where the market is going to go, because essentially that's what we're doing. We have to predict. Once you place a trade, you have to predict where that bet is going to go, right? If you're bullish, you're predicting that, well, I think that it's going to go higher. If you're bearish, you're predicting that it's going to go lower. You do have to make a direction bet. That's the stock market, right? So, looking at the oscillator here, we have a little bit of room, just a little bit there. I think that first couple hours of us moving sideways kind of helped to stay a little bit, but we still got a little bit of room. Isn't it interesting how we've cultivated these higher lows here? And then instead of coming all the way down to the retest this, that rising support on this oscillator, we didn't even do that. And you can see how it got faster and faster and faster and faster and faster. And that dip got shallower, shallower, shallower. Remember we talked about this on this video, right? And we talked about how, I think this was what? This was right here. This was right there, June 1st, that, market is preparing for the next level. And we're trading at like 300. So quickly, how fast we got up there. From there, that's a 7% run, and without any kind of pullback. From here to here, we didn't even see a couple percent pullback. Got up, gapped up, pullback, very shallow here, big gap up, very shallow pullback, continuation. Right? It's almost like market was in the first gear, a lot of jerkiness, and then got into second gear, third gear, and then fourth and fifth. If you ever driven stick shift, right? The first gear is a lot jerkier. Right, that's jerkier, and then second gear is a little bit more jerkier. But as you shift more higher gear, it's less jerkier, and then the car goes faster. And that's kind of what we're seeing here, what we're witnessing in this oscillator that is going to first gear to second and the third and the fourth, and then that dip gets shallower and shallower and shallow, right? So market gotten to that overbought level here. But we still got just very little tiny bit of room left. And I think bulls are going to maximize it. I think it's going to utilize it. I think the next level will be 325. 325 is a gap level. That's where the gap level happened. That is a resistance right there. That's a little swing high there because we stayed there for I think pretty much whole day. Looks like that's a swing high there. So I think we're gonna get to 325, and at that point we'll have to re-examine the situation. We got just a little bit here. I want to look at it closely. Here. Let me put more thinner line there. Right? Okay, so I just put a really thin line there so I can examine. So we got just a little bit of room there. Just a little bit. I'm gonna put a little bit up just to match with that. So we got just a little bit room there. You see that? Little bit of room there. So I think with that little bit of room, I think bull's gonna push up. I think they're gonna maximize this. They're really gonna utilize this and maximize its potential. It knows it's overbought. It knows it's tired. So we're just gonna maybe push one big push to about 325, maybe first thing tomorrow morning, right? And then I think potentially we see some more significant resistance at that level. So we'll come back tomorrow and we'll re-examine the situation and follow up on this oscillator there, because I think right now this oscillator is very, very important, right? Very, very important. I mean, we can talk about how we talked about that. We initially did see a pullback, but that short-term moving average was right there. We found that as support. We hit a big, big gap up. Big, big gap up. Because at that time, that momentum was already built. You see that how even angle of this thing is, you know, going from like this to like that, and now it's almost vertical. Do you see that? You see the angle of this thing going, right? And you know, if I actually go to daily chart here, like I'll end the video with this. We actually broke out. You know, we talked about this in the, you know, weekly video over the weekend. That was a consolidation right there. That was a nice consolidation. It took about, you know, little over a month, I think. Little over a month. But we saw a move, we consolidated. That's a breakout. And I think that's why this move has a kind of a, you know, has that strong leg, like has a strong move to the upside, because the fact that we hung around here for so long and built that, you know, we kind of absorbed volatilities there. Bulls were able to, looking at things daily chart, you know, bulls were able to rest, right, after this kind of move, and then finally seeing another leg higher. I mean, you can even do measure move. Let's see. Where is, yeah, why, oh, okay, let's just use this. So if I do it from the lows, I think that make more sense, I feel like, because that's a gap up level, we're 30.32. So I did it from here to here, and then a box, and then I measured it from there, and then that goes right to the gap fill area, which is 333. So 333 might be a possibility. What I think potentially could happen is, you know, we get up here at 325, and then we see a pullback, and then maybe retested my short-term moving average right there, because that moving average been acting as support this whole time. Sometimes, you know, what market is going to do, maybe shake some people out. Maybe this time this moving average is going to go up. It's going to break below it and maybe come to 317, right? So how many percentage pullback would that be? Let's say we're at 325 and then pull back to the gap area at 317. 2.4% pullback is nothing. 2.4% pull. We've seen something like that before here. I think that was what? That was about 2.3 pullback there, right? That was about 1. So we've seen 2.2, 2.4% correction is really nothing. That might be it, or you know, you might just pull back a little bit and hit that my short-term moving average, and then get right back up to 333 before seeing some significant pullback. And when I say significant, I mean like maybe 5, 6, 7%, right? So there's a lot of bullish momentum here. We want to continue to give benefit of the doubt to the buyer. Also, what I see is right now, and we talked about this on the market update video on Friday night. Remember this? I said, you know, right now, so many people are thinking there's no way, right? There's no way it can keep going higher. There's so many people thinking that it can't possibly keep going higher like this. And a lot of people are trying to, you know, trying to short here. And then I think they've been trying since 310 here. And I think the higher it goes, what happens is once you start shorting, because if you missed out the bullish rally, there's no way you're going to start going long here. You're not going to chase it up here because well, you're going to think that the odds are against the bulls, right? Because they think that, well, maybe it might grind high a little bit higher. But if we see a big crash, they think that there's higher payout. That actually not true, because we could see like I said, 2% pullback and get right back up. But you know how most people think, and so I think a lot of people keep still trying to pick top here, still trying to short. And I think as long as the overall census is that people are still bearish and people are still fearful, people are still thinking that this market is gonna crash, I think this market keep moving higher on that fear. I think we're going to see some meaningful pullback or steep correction once we see everyone turning bullish. Everybody, even cash people turning bullish, fear of missing out. Bears who got burned this entire rally, they're going to turn bullish. They want to grab. They think it's never going to pull back ever. I think once the sentiment becomes something like that, that's when we're going to see a steep pullback. We're talking 5, 6, 7, 8% maybe. But 325, I think, you know, that probably going to act as resistance, probably pull back about 2%, and then potentially get up and fill this gap. And then at that point, again, we'll have to re-examine. But when the gap gets filled, it's going to act as strong resistance, and we may see some strong pullback at that time. But I'll come back for you guys tomorrow, and we'll go from there, right? So you guys have a wonderful evening, and good luck trading tomorrow.